JB, hope everyone's doing outstanding. Why is this not working here? Is this working? Hang on one second. I'm going to restart this. All right. JB here, JB here. Hope everyone's doing outstanding. Thursday, October 23rd, 9:17 on this fine morning talk. Quick about the market. Some names I'm looking at go from there. S&P futures bouncing between gains and losses. So I guess we call it mixed this morning on the heels of yesterday's 0.5% sell-off. No news or catalyst really this week. At the noon hour yesterday, there was some news that the U.S. and China. I don't. To me, that's like not wasn't much. Just an excuse, I guess you say, but show a little dip in the markets. And then outside of that, all eyes tomorrow on CPI data, which. Yeah, I put the scenarios on the watch list this morning. I think, I mean, there's three, right? The thing, inline numbers, you would think around 3% or so. I think the market's just hold their ground, find footing. A hotter than expected, like massively hotter, 3.35, 3.3, somewhere in there. You would have to get us some pull, right? Maybe 1 to 2%. SPY gets down to 658 and maybe even 653. And then the flip side, cooler than expected, to 2.5, 2.7, even just slightly less than expectation. You have to think the market's going to rally, right? So, I mean, that's kind of how it's been anyway. But now that we've had this, uh, you know, hasn't been much data recently, so this is the focus becomes even more important. And then hopefully the government shutdown, second longest in history. You have to think that's got to end soon. So hope maybe this weekend there's another vote today. All right, so that's kind of the overall market. Yesterday down 0.5%, but the market's still up over 0.5% on the week. So today will be kind of like a key day here. We'll see if we can get back to a tight trading range. Just ironically enough, right? Tuesday in the afternoon from like 10:30 into the afternoon, the market traded in a 0.2% trading range. Actually, the entire day, right? And then we have yesterday, right? No, I mean here back to sell mode. So hopefully that's the end of it. I mean things to look at. Of course, we had the momentum names getting crushed for the second day in a row, the nuclear, the quantum names. But then yesterday afternoon or evening, you had a report out from the Wall Street Journal that the U.S. government's possibly looking to do some stakes in quantum names, small stakes, I don't know, like $10 million or whatever. But that was enough to kind of, well, hopefully it's enough to kick those names out of their rut. Maybe they find some footing here. To me, it's like these names, some of these names are like $2, 6, 8, 10 months ago, so it's like, some of these I just don't get it. It's like all of a sudden it's just coming to your attention now around the possibilities of quantum, and quantum's like, I'm not gonna sit here and say I'm 100% from like I know like the back of my hand, but it's kind of like a hit and miss tech, right? And you had Jensen on his conference call. I think it was last April, talked about the quantum names, and he said, "Oh, they're like 30 years out, right?" And then he kind of eased back. So maybe sooner than that in 20 years. So it's like no one really knows if when this quantum stuff comes to fruition, right? But I think the U.S. government's more worried about China, right, and worried that hey, if they focus on quantum and they're able to make that work, not be a good thing. So I think that's some of it. So we'll see what happens here. But to me, I don't look at the political side. To me, I just want to hopefully markets take it out, the momentum names out of their downward spiral, find some footing here, and then we can end the week on a strong note. I think if the CPI data is somewhat cooler, I think SPY 675 is not out of the question. That'd be a big spot there. All right. So that's kind of the overall markets. I posted this on, I guess yesterday afternoon too. This report came out, not even a report, it's just a quick article from the Wall Street Journal yesterday morning. And it's probably one of the more better pieces in regards to just given like, someone's always looking for the layman explanation of what I'm calling the great circle jerk, which to me is this all the circularity of these deals, right? So I wrote it down. It's like three sentences kind of explains my kind of the rationale or my thought when I hear about all these deals. The deals between AMD, Nvidia, OpenAI, CoreWeave, Microsoft, they're all just like intertwined, right? And which is great. I mean, they all have a vested interest for AI to do well and the ability and financing to make it happen, right? But when or if that never pans out to the magnitude that everybody's expecting it, like all these names are so intertwined, it's going to be like nasty if things fall apart, right? And there's things to talk about down the line, right? I mean, all this infrastructure spend. I mean, there's always depreciation. How many cycles do things go through before they have to be upgraded? How quick do things depreciate? There's all these different like moving parts, right? So to me, that was a nice little summation. Whether this happens or not, I don't know. To me, I'm always on the side of let's make sure the markets are ahead of things, right? If AI and quantum and all that is really truly going to revolutionize the world, you want to make sure that we have the means and finances to do it and make it happen, and also that we're not behind the eight ball. So you can look at both sides of the scenario. To me, I trade in the market, right? So I'm looking at the risks and the rewards. So I think we've seen a lot of the reward side, just always the risk side. All right, so that's kind of quick on overall markets, just on individual, and also just really quick on the markets. 10-year still under 4%. Great sign here. Hopefully that continues into the weekend. Now, just some individual names. I talked about flowers.com when I was on the rant yesterday morning. Stock was at $9. The plan was to lock some in at the open and then ride, right? So I thought $10 or $5, right? Once it opened, it was like $8, and it was just fading after the open, and the premiums were elevated. So used the move to close some of my November strikes out for 400%, and then it just kept melting, and it was a slow melt. It wasn't like a halt. The market didn't have to get halted for the volatility. And then it was in the sevens. I locked some more out for 300%, and it just kind of just didn't look like the FOMO was going to come through, right? And if it was going to be a short squeeze scenario, you would think that the people who were waiting to get in already had their chance, and now it's just the people looking to hit the exit. So lock the rest of the calls in for 300%, and then of course the stock all the way from up 100%, whatever it was, to in the red. So just crazy stuff, just crazy move. I was talking about on the rant yesterday afternoon too. The $10 November strikes were $1.20 for most of the morning, even though the stock was at $7. The bid on the $10 strikes were the same as on the $7 contracts. So those would have been the ones to play. But moral of the story, I'll continue to look for flowers.com because I think it actually might have a decent story for a turnaround and maybe move up to $8-10 in the coming months. So could be a name I'm watching. All right, so that's flowers.com. I don't know why I don't have this slide on here, but Deck, right? Deck reports earnings after the close today, 10% implied move. I traded it Liberation Day. I was trading Deck as a rebound play in regards to the tariff situation, what have you. Traded from profits into earnings, but then I didn't trade the earnings. And, I was kicking myself because the stock gapped from, I think it was 105 all the way up into the 120s. But then it gave the games back and then melted. It was back down to 100 within a couple weeks. Found a bid into September, and then the same thing, back to $100. I look at it as like parallels between MDB, and MDB did the same thing with its earnings, had a great quarter, great beat and raise. The stock gapped all the way up to 230, I think, and then back under $200. Then it had the next quarter in September, and it was at lows. And sure enough, what happens? Beat and raise, and this time the stock gapped and ran $100. It was up whatever it was, 35% on a week. Calls are up thousands of percent. I don't know if there's going to be a similar setup here with Deck. It's kind of like the market saying, okay, great quarter, show it to me again, and we'll respond positively. That's possibly the case here with Deck. I mean, there's concerns, right? So obviously the apparel industry with the tariffs, manufacturing in China, a lot of different moving parts there that could be some concern, the inventory levels. And then you also have competitive concerns, right? There's a lot of different names on the market that weren't in the past. So is Deck going to be a name that, muddles around here at $100 for the rest of its time? Or is it headed on back into the mid to high 200s? I might take a gander or nibble on some strikes into next week, the 130s, just because those look interesting on a risk reward basis. But of course, the risk side is if there's a flat earnings and it stays here at $100, those are going to be bidless. But that will be the strike I might look at the open. And then, heck, maybe we get a run up today. So if I get the calls at the open, I'm able to get some out for premium build. I'll do that. But that's Deck. And that's MDB parallels. Just some other names. Still have the SanDisk calls. Premiums are expensive into next week. Yesterday morning, right after the open, it was sitting there at 155. I'm like, oh, it looks great. My calls were solid in the green, and then a reverse with the rest of the market. But if that keeps going, if I'm able to lock the rest of my 165, I'm already riding freebies with some profits. I might look for some strikes into next week. And then Reddit, end of day. At some point, take a look at his trading range on Reddit. I mean, I don't know if this is a battle of bull and bears, and the bears are going to take this for bear flag setup. We'll see how it plays out here, but the calls look inexpensive on a risk reward basis on some of the moves that it's made in the past. At some point, it's going to break out. I'm sure it's going to be in the calls when it happens. That's Reddit. And then, gold. I had on the watch list yesterday morning too. I'm like, I'm not going to add any more positions on dust or golds, but then I thought there'd be a bigger bounce yesterday. It didn't happen, and it was actually selling off in the morning, so I got those GLL calls. I still think there's an opportunity for a pull here. I'll just continue to hold those strikes. Ryan freebies on the 13 dust calls. I have the 14s. And then last but not least here is Tesla, right? Earnings after the close yesterday. To me, it's like a non-event. You see people writing, talking about the margins or whatever, but they had a strong beat on the revenue side, EPS a little weak. It's not a name I've been trading over the last couple of years, so to me, I mean, people are trying to weigh in, talking about the market. I don't think it's the thing is, unfortunately, it's pulling the S&P down a little bit. It's only down $16. Maybe it bounces here today. But that's that, folks. Let's have a great day. I'll be back in audio later. Rock and roll.